Hey guys, Mike here. So, oh boy, last week was a fun one, and this week's gonna be even better, right? Because man, we are this close to the June lows, right? And will we break them? Will we bounce off of it? And you can bet there's gonna be some huge bets on both sides. But it is amazing, amazing how fast momentum can change in the market. And I'm gonna show that to you, boy. It is absolutely astonishing. And I'm also gonna show you something that took place Thursday and Friday that's pretty much stunning the markets in a way, because here the Fed is doing what? They're tightening. They're trying to take liquidity out of the market to try to bring demand down, to try to get people unemployed, to bring wages down, back in line, and all that stuff. And which, of course, in turn will bring core inflation down. And there's certain things that happened Friday, not only here, but around the world, that just kind of made people shake their head and say, man, is this ever going to end, right? And so I'm going to show you that stuff. But I want to show you, to show you what kind of trouble we're in the U.S. And if you're not in the U.S., you can watch this. I don't know how your government works. But this happened Friday. And actually, I'm sorry, Thursday. This happened Thursday up on D.C. And this shows you just another example of how you wonder why the system is broken and just corrupt as can be, and why companies aren't regulated, or the oversight committees in the government don't regulate them. Here's why.
Well, good afternoon. I'm excited to be here with each of you. Before I get started on my questions, Mr. Moynihan, I wanted to let you know, Saruthi, raise your hand, Saruthi. She has been my team member for a couple of years now, but on Monday, she becomes a Bank of America team member, about which she is very, very excited. So I hope you'll take good care of her and know and recognize the talent that she has shown already in our office. I'm sure she'll do the same at Bank of America.
We will do that, and her father already works for us, so he'll take care of it.
You should have called us.
Well, good. Well, I appreciate the opportunity to chat about some of these issues today. What I'm really interested in is the state of the economy.
How are you floating your resume to big banks? I mean, you're supposed to be the ones, policing the big banks.
Grow up, Jamie.
There must be some kind of law against working for a financial institution right after you've been working in financial regulation, right?
No. Hey! Doggy!
Hey, come over here. What are you doing at
He's a Goldman. Yeah.
Her father already works for us, so he'll take care of it.
You should have called us.
Yeah, that's right. They sit there and supposedly are oversight for them, but then, of course, they get hired by them even before they even leave office, right? That's no conflict of interest there whatsoever. And so it's unbelievable. I mean, the biggest one I ever saw this was, I can't remember the senator's name. He was in charge of getting Medicare D-Pass, which is for prescription drugs. And in the bill, he made sure the big thing was that the government, which is the biggest purchaser of pharmaceuticals, could not negotiate the prices, right? That was the big thing. And so what happened after that bill got passed? He resigned his Senate seat and became a big executive for one of the pharma companies. I mean, it's unbelievable, guys, what goes on up there. But switching back to the market, you can see right here, the week before this, I showed you we lost 1.2 trillion, and then last week we trumped it with 1.4 trillion. So 2.6 trillion knocked out of the market, if you sold, that is, over the last 2 weeks alone. And here's what everybody's looking for, and this is where all the bulls and bears are lining up right here, the June low. As you can see, we missed it by 0.3% Friday. You can see we're getting oversold on the RSI. That's why, a lot of people are going to bet, or at least play, this bounce. Almost bet money on that. And if you go down, the shorter time frame, you can see we were right there. I mean, right at it. And so, the bulls came in, pushed it higher. And so the bulls and bears are going to be really going at it tomorrow for sure. And, to show you what I talk about when I'm saying sentiment in the market changing so fast. You remember how just everybody was just, oh, we're going to the moon, right? And we bounced in June, and oh my God, and euphoria and all this stuff. And there's light shining on us. It's over. Oh, this is great. All-time new highs. And just look this right here, man. This is the S&P 500 information technology sector, and this is the number of stocks above their 50-day moving average. And you can see, look how high it was and how fast it fell off a cliff. Look at that. It was like 80-something%, I believe, at one point. And then, boom, down to 3%. I mean, that is amazing how fast that happened. And, you go over to the sentiment Look at that right there. 61% now bearish, only 18% bullish. That was really, really fast. And then just look at all the puts. The demand for hedges is going vertical. That's right. I mean, the put premiums are through the roof. And you just look at this right here, and you can see it over to the right. I mean, it's hard to miss, but wow. I mean, that is crazy, isn't it? To see that. And really what this shows you, this chart going from 2020 to 2022 on the right-hand side, just how many more people have access to call and put options. That's really what this is, right? I mean, anybody can buy them now. You can see that plain as day. That's what's happening. And a lot of people are playing these hedges and have been taught to play these hedges. And then, of course, the yield curve. I mean, the deepest in 4 decades, a 10-year, 2-year is. Look at that. 4 decades, going all the way back to 1982. You can see in 2000, we beat that already. We're deeper than 1982, just about. And so, you know, that's what another thing everybody's looking for. But again, keep your eye on the 3-month, 10-year. That's what everybody's going to be looking at for sure. And if you're getting out of this, please hit that like, subscribe button, and think about sharing the video. I sure appreciate all your support, guys. And so, you know, should it be a surprise? No, of course not. With what the Fed's doing, with all the liquidity coming out of the markets, and just, I mean, the yields going through the roof, right? This will be a year nobody will ever forget. But, you know, the big thing is here the Fed's doing one thing, and unfortunately, because of what they're doing, and they have to do it to bring down inflation, but because of the combination of what they're doing and inflation, it is putting governments in a spot to where they got to figure out what to do with their citizens, right? Because you have, you know, people in certain income brackets that are getting just destroyed right now. I mean, there's no way, especially, I mean, imagine being an elderly woman, because remember, people who are on Social Security right now, their generation, females for that matter, most of them didn't work, right? Because they stayed at home. The husband went out and worked. They raised the kids. That's the way it was. Well, now they're retiring, right? And a lot of them's husbands isn't around. They've already passed on or whatever. So they're living off Social Security. You know, so imagine living off Social Security, which isn't much. It don't pay much, not as much as you think it does. And a fixed income, right? And seeing prices go through the roof, and now you're seeing interest rates go through the roof, right? So you didn't want to take out a loan. It's going to be much more expensive, right? So all this stuff. And so these folks are in trouble, right? And then you got, of course, people that have to be on welfare, things of that nature. They're in deep trouble. And so the state governments here and places around and other countries are being put in a situation because of energy prices and everything else that what do they have to do? Stimulus, right? They're sitting here. You saw California just released this the other day. This happened, I think it was Thursday or Friday when this came out. But they're going to be doing $10 billion in stimulus payments coming out, and I believe it's coming out in October, if I'm not mistaken here. And so, you know, that's a big one. Then you got Britain. They actually shocked people when they decided to cut taxes for their citizens, but also they were going to raise corporate tax rates. Well, now they put that on hold. And so, boy, they sold off like crazy on that news. But then again, I mean, look what's going on over there, right? It's a catch-22. If you don't do it, what do you do? Just let the citizens fall through and go, you know, broke and hungry? I mean, what do you do here, right? There are people out there that it's happening to. And so it's because of this combination of things that are happening. And so, but what does that do? I mean, it's like I found these memes. This is basically what it does right here. It's like taking water, look at that, just throwing it over a fence. I mean, that's basically what you're doing right now. Or, of course, another one I found was, you know, this is the Fed. They're like, well, we're trying to bail it out as the stimulus is going back in. That's not really working. So what do we got to do? Well, let's double the balance sheet roll off. You know, and maybe we play catch up here. Maybe we're able to get, you know, enough liquidity out of the market. And so that's why, you know, not only is we're in a position to where obviously inflation is going to remain stubborn, as we've seen already, especially core, but this isn't going to help either. Right? I mean, you're pulling liquidity out and you're just putting it right back in. Pulling liquidity out and you're putting it right back in. And not just here, but around the globe, you know. And so, I mean, you know, China's doing stimulus. And so a lot of stimulus. And so this, you know, it's just going to delay the inevitable and keep kicking the can down the road, basically, is what's happening. But then the question is, like, what's enough stimulus? You know, and a lot of the stimulus is coming out. It went come out in August. It's coming out this month. And then it's coming out in October. Right now, whatever the I don't know what you want to call it, the cynical person in me or whatever is, you know, is this coincidence is right before an election? I I don't think so, right? I mean, but of course, the tale will be what happens after the election. If you see more stimulus keep coming out, after it, and trust me, I don't care whether you like the colors red or blue. It's 20-something states. They're all a mix of colors. Trust me, I live in a red state right now. They're doing stimulus. So, that's the way it is, trying to get reelected and stuff. And so, but, does it help the Fed and what they're trying to do? Absolutely not. Absolutely not. I mean, it's simple math. And so this doesn't help at all. It's not going to help the sentiment in the market, right? But we got to keep people afloat. And that's just the way it is, But the things you got to be watching out for, and the reason why this week the June low is so important, because if it's broken, you're looking at probably another 7 to 8% drop down to the next level, which actually was the peak of the 2020 market right before the crash. And so it's actually a major support level people are looking at. And so that's the reason why you look at that. And it's like when moving averages are broken, I've showed you that many times. If that support level breaks, it could be like a waterfall effect, right? And so that's basically what you're looking at. But I think you see a lot of people in market, just watch how many calls get bought up tomorrow or whatever, looking for this short-term bounce, like to see if it'll actually bounce. And so, it wouldn't surprise me a bit to see a short-term bounce. Let me be very clear. Yeah, we can see a short-term bounce. As far as like long-term, though, I mean, no, I don't think anybody expects anything major to happen, right? Because the Fed's still going to be tightening, doing all that stuff. There's just no reason for it right now. The other thing people are just waiting on is earnings. That's the big one. I think you have, if I'm not mistaken, Micron reporting this week and Nike. All right, so that's two big ones. I believe they're reporting this week, and to see how they're doing. Both stocks have been hammered. And so, but those are, one for the semiconductor division or sector, and then of course Nike's a big name out there, so we'll see, because people need to buy Nikes. Their shoes are very expensive, right? And so we'll see if people are still buying those Nikes up around the world. That's going to be a key thing to listen to, and I'll let you know what they say. But that's the thing to watch out for. So Monday, watch out for that level. If it breaks, can we get back above it, or is it down we go, right? And so that's the big one, because once you start getting below that level, yeah, it can be, it's ugly. That's why people didn't want to start breaking these kind of levels. But, we'll see. Still on a massive downtrend, is what it is. So buckle up for this week. I'll let you know how things are going, and hope you have a good rest of your Sunday, and I will see you later.